Hey everyone, Couch Investor back on our video for today. So let's talk about the trade desk. I've talked about the trade desk a couple of times on this channel. Yes, the stock has gone down since then. They had a huge stock split as well. So this is the first time you're watching a video about the trade desk. I highly suggest you go watch the first ones, as those are more of an introduction. But in this video, we're going to talk about a couple of things. One, the statement that they made right after Snapchat crashed the market. Remember, Snapchat crashed the market because of mismanagement, not because that they predicted that the whole advertising industry was going to take a hit. They wanted you to think about that, but it's actually a pretty Snapchat type of problem. Now, the trade desk came out and said something like this. So on May 26th, the date of the company's annual meeting of stockholders, the company continues to expect revenue to be at least $364 million and adjusted EBITDA to be approximately $121 million for the quarter, which means their guidance remains unchanged. And look at this. They say here a revenue to be at least $364 million. As you will see in just a bit, when we go over their recent earnings report, you will see that the last time they said at least, they beat it quite comfortably. And again, if you think that, if you're a strong believer that everything that has gone to linear, that will go now to digital advertising, to CTV, etc., then you probably believe in companies like Pragmatic, the Trade Desk, etc. And it's actually very, very early days because these are the numbers from last quarter. In 2021, gross spending on the platform was $6.2 billion, which is just a drop in the bucket when you know that the global ad industry stands at $766 billion and is expected to hit $1 trillion by 2025. And also looking at those numbers, right? If we go from 2012, let's say first $1 million month, then 2 years later, they go from $1 million month to $1 million day. And then fast forward to 2021, first over $1 billion in revenue per year. They've also been profitable for a very, very long time, which is very rare for growth companies. From 2015 to 2021, they've grown adjusted net income from $16 million to $455.6 million and adjusted EBITDA from $39 million to just over $500 million. Now, the trend on revenue and gross spend has been just tremendous along the years, as you can see here. Stairs on the way up from left to right, just like you want to see them. The Trade Desk is also a global company. They also buy the whole internet, right? Even media that isn't digital will be transacted digitally using the internet. Companies like ESPN, Google, Yahoo, Spotify, Walmart. We've talked about Walmart and their DSP platform in the last video. Roku TV. It obviously goes into shopping as well. So shopper marketing, as I said before, part of Walmart initiative to expand media business. They basically helped Walmart have their own DSP platform. They also focus on expanding retail data marketplaces worldwide. Shopper marketing budget estimated at over $200 billion. This also allows smaller businesses, as we've talked about that in the last video. This also allows smaller businesses to enter that huge market that usually only the biggest companies could compete in when advertising and exposing themselves to potential customers. The Trade Desk helps with that as well, as they go and help those small to medium-sized businesses. Now, before we go and look at the recent earnings report, if you want to support this channel, check out the link in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couch investor. Now, I already know that a couple of you will comment on the fact that the Trade Desk is more expensive than a company like Pragmatic, for example, even though the Trade Desk is on the demand side and they're basically the sole leader there, and Pragmatic is on the sell side and there are some other competitors out there. So yes, I would say paying a PE for the next 12 months of over 50 times, yes, might be expensive, but as you look from the peak price to sales ratio for the Trade Desk, right? Peak price to sales ratio when the price of the stock was probably its highest was around 60 times sales. Now it's under 60 times earnings. So the company is moving very, very fast on the way up. Obviously, it did help that the stock crashed a bit, but still the company is still growing and becoming more and more profitable. As you can see, free cash flow is going up as well. What you would like to see in the future is that return on equity go back up towards those 20%. So Q1 results, revenue came in at $315 million, growing 43% year over year. Non-GAAP net income at $105 million. Yes, GAAP net income is at a loss, and earnings per share as well of negative 3 cents, whereas last year they were positive on the GAAP and non-GAAP. Now they had strong customer retention of over 95% during the first quarter, and this has been the case for the past 8 consecutive years. Continued collaboration and support for Unified ID 2.0. We've talked about that in the past as well. They've also made some moves for the Unified ID, but the European one, which is one of a kind. They've partnered up with Adobe Real-Time CDP, a leading customer data platform. And then this is what I've talked about before, helping these small and medium-sized businesses. Now the launch of OpenPath has been extremely successful. Same with Solimar, as we've talked about that in the last quarter. So all good there from that standpoint. Now, as for next quarter, they expect revenue of at least $364 million, as we mentioned, and adjusted EBITDA of approximately $121 million, which I think was just below the street's estimates. But then again, they might beat that as well. Now, I want to go back to their presentation real quick and show you this picture and why it's extremely powerful. So they say the most effective advertising is targeted. So usually what you had is basically a picture full of color, because that's what traditional advertising basically looked like, right? You were advertising to a large audience, which made no sense, right? Now, everything's black besides that woman here, because you want to target that specific person. And also with Unified ID 2.0, you don't really get all the privacy harassment, right? You get exactly what you need to target that person without really getting all the personal details of that person. And this is exactly why the Trade Desk will keep on winning each and every year. And as for the earnings call, they actually talked about Netflix quite a lot. So a couple of things here. As many of you know, this was the CEO saying, as many of you know, I've spent many of the last 10 years publicly predicting that Netflix and nearly everyone else would eventually show ads. Netflix, as you know, recently announced that they're likely to make ads as part of their business, which makes total sense, because when you have ads, the price of the subscription goes down. He also said that he believes that the Trade Desk is now firmly established as the default DSP for the open internet, and that they are well positioned to grow and grab share regardless of the macro environment. So again, they're saying here, look, we know about the macro environment, we know about everything that's going on the world right now, but we're willing to take a small hit in the short term to grow much larger in the longer term. And lastly, again, about the streaming platform, HBO Max, Disney Plus, and Netflix are all public about their intention to implement ad experiences. This adds pressure to all content owners to accelerate the move to data-driven buying and selling, and finding ways to make the most competitive consumer experience, which means limited relevant ads with high CPMs for CTV to continue to produce the amazing and expensive content that is driving this new golden age of television. Relevant ads are the only way to fund and preserve it. This requires CTV to participate in the open internet, because in walled gardens, one cannot control universal reach and frequency. And this point is extremely important, because ads help create better content. If there's better content, it's more likely that people will sign up to those platforms. More people sign up to those platforms, advertisers might spend more. Now, advertisers like to spend on advertising, obviously on bigger platforms, but that just doesn't stop there, right? They want to see results. With the help of the Trade Desk, Roku as well, PubMatic, etc., they will get better results because of what we've discussed just before. Targeted marketing is much better than what happened before on linear. And so I do believe that ad-supported tiers are here to stay, and most streaming platforms, let's say, will offer that tier, because one, it's less expensive, it will generate more revenue for that company, which means more content, maybe even better content, adds more subscribers, and will attract more advertisers. Overall, the Trade Desk is a great company to have in your portfolio if you believe in everything I just mentioned with the ad spending going from linear to digital, CTV, if you believe in digital advertising, and that industry will continue growing. I also believe that the gaming industry will see such an effect as well, as you will see more maybe real-time advertising inside of games. And obviously, do share your thoughts down in the comments below. Do you own any of those companies? Leave it all down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always, I see you guys in the next video. Bye bye.